Hello traders and welcome to another video review. Today is Wednesday, June 12th, 2024. We are looking at the daily time frame chart of Ethereum to Tether. As you can see, daily time frame chart, Japanese candlesticks. And if you remember the last analysis of the Ethereum, we spoke about this particular candle here. That was on kind of a sign or indication of a possible of a possible warning for the traders. Basically, what was that warning? That this prevailing trend might be terminated, and this is what it actually happens. Few days after, we of course had a new high, a local high, 3,970 tethers, but then you can see the market just next day came back to the previous range, and then after, I guess it's 1, 2, 3, 4, 5, 6, 7, 1 week, we have a downside breakdown, consolidation, downside breakdown, and today we're just trying to do some kind of a pullback. So it's worth to mention that these things here are quite interesting if they happens, right? So we got this range here, and the market has been trading inside of this range for quite some time. It pierced the range to the upside, but then it pierced the range to the downside eventually. So that was very powerful candlestick pattern, basically high tide doji. This is how it's called. It's almost a perfect doji, but the body is just a little bit too much than the textbook example, of course. So this range is now still valid. However, we need to know that this is the technical resistance right now, the level of 3,970, and well, this level here was a technical support, 3,499. So we just hit the technical support after this big pin bar was made, right? This is the end of the April 2024. Local low was made already at 3,440. However, this is not, it looks like this movement to the downside is not done yet, right? So let me just apply some Fibonacci here. Why? Because we want to know how much we did retrace already. If we get this swing low as our point of reference, and of course the swing high, let's go with the swing high here. Let me just play with this situation here. We want only that levels here, and I want it to be on the middle top and on the right. So as you can see, right now we get rid of 23. We need to get rid of 38 because we already hit this level, 3,546, and the hardcore levels like 50 and 61 and 71% has not been hit yet. So let me just leave 50 and 61%. There you go. Those are the Fibonacci retracement levels. 50% is 3,415 and 61% is 3,284. So we can still go lower than we are right now. We can still hit the 50% Fibonacci retracement or even 61% Fibonacci retracement, and we are still good with the overall scenario, right? Who looks like this: movement to the upside, to the swing high, then movement to the downside as a correction, right? So we got the correction even towards the 36%. That's nothing wrong with this, and then continuation of the prevailing trend, right? So this is now looks very corrective, right? It doesn't actually means that the market will go for 100% towards this level, 3,284. It's just one of the many levels that might be considered by the market participants that it's worth to be indicated as the reversal level. We might go to the level of 50%, we might go to the level of 61%, we might stop here and bounce from the level of 3,499 or 3,500, and then like this, and then go higher, right? Nevertheless, if we continue to move lower, if we see the indication on the lower time frames, on the lower time frame charts, that the market is under the pressure and it wants to go lower, next target is 50%, then the 61%, and if we break below 61%, the chances for the uptrend resumption are getting drastically lower. Okay, so this is our plan. We will stick to the plan for sure. Now let me just put some indicators here like RSI. The RSI, as you can see right now, is under the level of 50 already. So let me just place a line here so you can see where is the level of 50. More or less, it's somewhere around here. Let's say, okay, that's not a problem. Where is my line? Oh, it's disappeared. Okay, maybe now. Yes, we are below the level of 50. So now the bears are in charge of this market for a short term, right? Because this is a daily time frame chart. This is what I mean for the short term. We went down from the extremely overbought conditions. As you can see, RSI was above the level of 70 for a few days. We've been trying to do something with it, but the bulls were too weak to continue to the upside, and then the market reversed towards the 50. It broke and made a low at 42 points. So this situation here looks like a very typical example of a classical corrective pattern. So we got the impulsive movement to the upside, corrective pattern to the downside, impulsive pattern to the upside, but we are just waiting for this market to hit the correct level, either technical support or maybe one of those two Fibonacci retracement level, and then reverse and continue the up move. This is our scenario. This is our outlook for the Ether to Tether at Zondacrypto. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.